Dear friends, the views expressed in this video are not the views of the managing committee, nor is the presentation a solicitation for any investment company. This is an educational video, and it is meant to inform the viewer about the avenues of investing society deposits. All the numbers and the figures are only indicative, so please refer to the official handouts of the society. This is the first video of a series of 4 videos, and the purpose, as explained earlier, is educational. This will help you to form an opinion based on information, so that the discussions that take place during the general body meeting are from a position of knowledge and information. Now here are some numbers which have been shown in the Excel sheet that has been circulated for the budget for the year 2017-18. The income is 1,11,63,279 rupees. The expenditure is budgeted to be 1,11,58,664 rupees. So that leaves a very small surplus, or a budgeted surplus of 4,616 rupees. So what do these numbers mean in terms of our monthly maintenance outgoing? Let's do a quick calculation. Our expenses, as noted in the previous slide, are 1,11,58,664 rupees according to the budget. The carpet area for the entire building for 265 flats is 1,45,164 square feet. So the maintenance outgoing rate per month works out to 6 rupees and 40 paisa, out of which we are paying an ad hoc of rupees 3 on a monthly basis, rupees 3 per square foot per month per flat. That gives us an idea as to how much we need to raise from the maintenance deposit corpus that has been collected by the builder at the rate of 3 lakh rupees per flat owner. First of all, we must understand that in order to raise 3 rupees and 40 paisa per square foot, we multiply that by the total carpet area, and we get this number 59,22,691, which is the return we must get on the corpus of the maintenance deposit. It is the interest rate that is going to determine how much we are going to get. The present corpus, after everyone has paid, will amount to 3 lakhs multiplied by 265 members, which comes to 7 crores 95 lakhs. But the fixed deposit rates have been falling consistently. If you see for the past 3 years, the 3-year deposit rate, which was close to 8.75, has dropped to somewhere to 7%. As a matter of fact, the average for our holdings is around 7.5%, while every renewal of a fixed deposit is going to be around 6.8%. That is quite a big loss of income, which we shall shortly see in the next couple of slides. The builder has been anticipating this drop in income from earnings on the deposits, and therefore a few months ago, shortly after the society was formed, Mr. Khataukar, the chief executive of Athashri Homes Private Limited, told us that AHPL was anticipating or planning to return these deposits to the individual members or to the society, because they would not be able to keep up with the expenses at the rates of interest which will be available in future. So they came to us with this plan, saying that we want to return the funds back to the individuals or to the society. If the money has to come to the society, in that case, the general body will have to pass a resolution, and on the basis of that resolution, those deposits can be transferred to the society. If those deposits are transferred to the society and we have to earn interest on that, we will now consider the tax implications of that situation. The tax on society income from deposits which are kept in commercial banks are, given the current FD rate of 6.8%, the income tax rate for a cooperative housing society is 30%. It is actually 10% for the first 10,000 rupees, 20% for the next 10,000 rupees, and any income above that is having a flat rate of 30%. So you can just count on 30% flat rate. So in other words, any deposit kept in a commercial bank, whether that's a nationalized bank or a private bank with a yield of about 6.8%, will give us an effective yield of only 4.76%, which is a 0.25% less than 5%. That's a big drop from the original plan which the builder had of earning money at the rate of 8% or close to 8%. We'll just see how this figure affects us. A number of these fixed deposits will start maturing. Some have already matured in the month of August. There'll be some maturing in October, November, January next year. And slowly the interest earnings on that are going to come down. If we have to work out the deficit, this is how it will look like. Currently at a budgeted rate of interest of 7.5%, we expect to earn 58,89,375 rupees. But in another year's time, once the fixed deposits have been fixed at a new rate, the return will only be 37,84,200 rupees. The budget doesn't include certain expenses. For example, the sinking fund is not shown. The sinking fund is going to cost us around 5 lakh rupees. The auditor's fee, which is mandatory, will be around 50,000 rupees. The advocate will cost another 25,000 if we just have to go for a simple conveyance. That leaves us with a net deficit of approximately 5,75,000 rupees. So the total expenditure is actually going to rise to 1 crore and 17 lakhs 33,664 and not the number shown in the budget. That is a big deficit. Let's take a quick look how that affects our finances. A 6.8% return after taxation will just leave us with 37 lakhs and 84,000 rupees. Plus our revenue generated from the ad hoc maintenance charge of 3 rupees a square foot fetches us 52,25,904 rupees. That all adds up to just a little over 90 lakhs. And as we have mentioned earlier, from next year, which means 6 months from now, the new financial year will start from the 1st of April 2018, which is just about 6 months away. At that time, the new budget will show a deficit of 27 lakhs and 23,000 rupees because our expenses without taking into account any inflation will be 1 crore 17 lakhs and 33,000. And the revenue that we'll be having in our hands from the reduced returns on fixed deposits and the flat 3 rupees ad hoc rate will fetch us only 90 lakhs and 10,000. How do these numbers affect us at the individual level? We shall just take a quick look. If we are to calculate the cost per square foot, our deficit of 27 lakhs and 23,560 rupees when it is shared equally by a floor carpet area of 1,45,164 square feet, which is the total carpet area for 265 flats, comes to 18 rupees and 76 paisa per square foot of carpet area per year, or roughly 1.5 rupees, a little more than 1.5 rupees per square foot per month. If we are to translate that to the floor area of a flat, the smallest 1 BHK flat will end up paying 8,200 rupees extra every year. The biggest 2 BHK flat, which has an area of 833 square feet, will end up paying 15,500 rupees approximately every year. That is a big amount of money. As you'll realize, our present monthly contribution is 3 rupees, and that is expected to go up by 1 rupee and 56 paisa, which is 1.5 times the present rate. That brings us to the end of this video, and I shall just summarize the key points that were discussed. First of all, we talked about the income sources. One half of the income comes from the interest on the deposits. Each one of us has paid 3 lakh rupees to the builder, and the remaining is generated by paying an ad hoc amount of 3 rupees per square foot of carpet area. Next thing that we saw was that the sinking fund and some other expenses are not included in the budget, which will have to be included from 1st of April next year, which is 6 months from now. Also, the hard reality is that the income from interest is dropping because the interest rates have fallen from more than 8% to less than 7% today. And we saw the impact of that in terms of rupees per square foot as well as per flat. The deficit is going to cost us more than 50% rise in our monthly contributions. And the cost per flat owner is going to be anywhere close to 8,000 to 15,000 rupees per year. 8,000 for the smallest flat and 15,000 for the biggest flat. The solution to this problem lies in having two actions. First is to find ways and means to increase the income without having to pay any additional amount in terms of the ad hoc monthly maintenance amount of 3 rupees a square foot, and also finding ways and means to reduce expenditure. So the next 3 videos are going to look at those points. So thank you very much for your attention, and see you in the next video shortly. Thank you and bye-bye.